All right, good morning. Comment allez-vous? Guten Morgen. Ja, ja. Yeah, yeah. Beautiful though, huh? No, I mean the coffee. All right, I guess we should get on with it. Can I look at XRP? Nat Gas. Yes, I can, Petey. All right, let's go. 3, 2, 1, hit it. So good morning. Welcome to Forex.Today. It is Wednesday, oil inventories day, another dumb prediction day, ADP. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. But please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Yeehaw, ma! Hey guys, my name is Wayne McDonald. I'm a currency trader just like you. I am your guide on this journey we called Forex. Today we will cover essentially whatever you want. I already have requests for XRP and for Nat Gas. Sure, you got it. What else would you like me to cover? Just ask, and I will do my best to help. We can cover technical analysis, fundamental analysis, trader psychology, but ultimately I just answer your questions for an hour and a half. I've been doing this webinar thing for about 15 years. I've been doing the trading Forex thing for 20 years. In fact, on Friday, I will not do a live stream on the Forex.Today channel, but on the FX Street channel. We call it Trade Non-Farm Payrolls Live, and that will be the 15th anniversary of that one webinar. I've been doing that one webinar every month for 15 years. So what that says is I've been around and I've done a few things and I've learned a whole lot. I've made some mistakes. I've had some victories. We laugh, we cry. So anyways, I'm here to share all of that, the good, the bad, and the ugly, with the overriding goal of A, helping you build confidence, but B, actually developing skills. Hard skills like technical and fundamental analysis, but soft skills like patience and discipline. So anyways, ask questions, get involved, click the like button, subscribe if you're new to this. If you want more resources than the live stream, then look at the description below the video. There's a link to my book. There's a link to my video training courses. There's a link to my live groups. There's a link to my chart templates. And of course, there's a link to tradersway.com because you're going to need a broker. Traders Way is a broker. You're a trader, they're a broker. There might be an opportunity to partner. So when you get to the point where you're ready, you have the skills necessary to trade real money and the confidence that you're going to need to trade real money, You're going to need to choose an execution partner for that business of yours. And so maybe if you start now with a demo account, they can earn your loyalty and your respect. So when you make that decision to go from demo to live, you already have an execution partner for your brand new successful Forex trading business. Okay, fast execution speeds, big swaps, narrow spreads, those are things you like. World-class customer service. Okay, so they've earned my loyalty and respect. Give them an opportunity to earn yours. Tradersway.com. That link is also in the description below. Rari says, can we look at Ripple today? No, but we'll look at XRP. Okay. We're not the same. Thanks, Sangna. I appreciate that. Okay. So, yeah. Just looking at some of the questions here. It's been many days since I explained the COT report. Yeah, I don't need to go over the COT report. It changes once a week. It's not like I'm hanging on to a thread going, oh my God, I might shift everything because of COT. Yesterday I discussed somebody going through and looking at the EIA reports that show oil inventories in the United States. Okay? And that there's where we are, there's where the average levels have been, and then the variance of that over 5 years. So I said, if you look at that, then you'll know what the news means, the economic release of oil inventories are up or down. Well, they're meaningless unless you understand the context of the information. So COT is very similar, where I understand the seasonality of the markets. So COT is helpful maybe once a month, maybe every 2 months you could look at it. And you can say, oh, well, that's interesting. But generally, it's usually what is normal. It's usually what you would expect. And what you want to see is when the entire market is on one side of the trade, and then suddenly there's a flip. But we already use other tools to do that, right? You have to understand, when COT was sort of a prominent, like, what was his name? Williams used to use it a lot. Well, that was well before technical analysis was around. So it's a nice tool to have. It teaches you things like perhaps like seasonality, when everyone would be on one side of a trade, because it makes sense. But it's more of the issue of when people get out of those trades. But that's what seasonality is, and we already expect some of that. And we would use technical analysis to refine this information, certainly more refined than updating once a week. Imagine making a trade on a weekly chart and then not even looking at another candle until a week goes by. I mean, we could do better than that. So why don't I spend more time on COT? I think I spend enough time on COT. But for many people, it's an eye-opener. So it's nice to explain that tool. And of course, you can go to Forex.Today for that. The other big eye-opener is when I show you, for example, Euro has been rallying for 3 or 4 weeks, but nobody's buying it. And it blows people away because they're like, oh my God, well, how could that be? And then we have to have the explanation. No, they're unwinding dollar long trades. They're unwinding. They're unwinding the dollar positions they've built. No one gives a damn about the euro. So the euro's going up only because they were short euro dollar. So now they're exiting euro dollar really because they're dumping the dollar. And the equal and opposite reaction to that on euro dollar is euro dollar goes up. So it could go up for weeks and nobody's actually buying the euro, but everybody's dumping the dollar. Okay. You see? So, yeah. So that's why I don't cover it day by day by day. That wouldn't be necessary. Okay, cool. Euro's got some strength here. Yay! Pound's got some strength here. Yay! Kiwi's got some strength here. Yay! Aussie went from super weak to some strength. Yay! Yen is coming down. Yay! Dollar's coming down. Yay! CAD is going up. Yay! Everything we wanted. Remember, this is the key week. We started the week with everything we didn't want. And we expect by the end of this week, and certainly next week, to have the things that we do want. And so that's why on Monday, I was kind of showing you not to freak out. I'm like, okay, these things are happening. Okay, we expected these things to happen, but we don't want them to happen, but we expected them to happen. So we haven't been over trading. We haven't been gambling. We haven't been loading the boat. We're just letting things do what it's going to do, having fallback positions for everything, and just waiting our turn because we know it's coming. We know our turn is soon. And all of a sudden today, suddenly across the board, we get everything that we want. Well, we're like, today is the last day of March. And we said by the end of the March, right, we should have everything that we want. And then on the very last day, look, it's everything that we wanted. At least it could be the very beginning. We don't know if it's, long lasting, but we think it is. But isn't it interesting that suddenly dollar weakens again, yen weakens again, Aussie's up, Euro's up, CAD is up, pound is up, Kiwi is up, Swissy's down, dollar's down, and yen is down on the very last day of March. And we said by the end of March, that's what we expect to happen. All of a sudden you're like, oh, snot. Okay? Isn't that great? Okay. Theta says, if I want to know what the predefined target for economic indicators, how to find that, like the suitable unemployment rate, and so to change particular. Yeah, Theta, you're asking, like, should you have an economics degree? Maybe. Okay. The slow answer, but the good answer, Theta, is go to one of the online sites where you can get, an economics degree. Right? There's lots of sites where you can get a real college degree from, like, the University of Eastern West Virginia will offer you an economics degree. You probably pay $50 for it. You can do it in less than 2 years. You should do it. Okay? But that's too easy, Sangam. Like, if you say, oh, well, inflation target is 2%, and full employment right now should be 5%. Like, where do you get this information? I don't know. I get it by just doing my job, but I also have the degree in the background, so maybe that's how it frames it. That's how I pull this information. I know what to look for. So, honestly, like, it's so easy now to get a college degree. It's ridiculous. Okay? It's ridiculous. It's unbelievably cheap. You can do it from your kitchen on your laptop. Okay? There's tons of sites where you can do it for dirt cheap, right? Like edX, for example. You can get a mini MBA and it costs you, $50 a class or something like that. So you're in it. You get like a $300 mini MBA. Like, I don't know, do stuff like that at, on the weekends and in your spare time and knock it out. Okay. Yeah, it's baby steps and it's time and commitment, but you should do it. Sylvester says it's free, but if you pay the $50, like if you got the $50, you get the certificate to prove that you actually did it. So you can say, well, I took a mini MBA from the University, of Eastern West Virginia, and you got something, right? So anyways, take a look at that. Barry says, I'm still not bullish on the euro yet. Yeah, I'm not bullish on the euro at all. Okay. But I'm going to buy euro dollar, but I'm not bullish on the euro. Why would I want euro? Okay. Okay. Cool. So, great. So let's go through. We'll start with commodities today, if that's okay. Cave, it's a bigger question than that, Cave. Okay. It's a bigger question. Theta's moving on to the next step. Theta's like, hey, I want to know things like the target for economic indicators. What is a central bank targeting? What is normal? What is abnormal? What is full employment? What, versus what employment is? What is full employment? What are the components of full employment? Things like yesterday's conversation of like the difference between U3 and U6. You're not going to get that at baby pips, right? Okay. So Theta's asking a higher level question. That's why I'm like, go to the next step. Get the degree. Okay. Ben Bernanke, for example, wrote a book before he became the chair of the Board of Governors and the chair of the FOMC. He wrote a book called Inflation Targeting. So when he became chair of the Fed, I immediately went out and bought a couple of his books. One of his books he wrote a series of essays on the Depression and central banking of that era. So before we hit the great recession of 2007, 2008, 2009, 2010, I already read his book on how to manage a central bank through a depression. Cool, right? Right? Cool. All right. Let's stop. WTI, my WTI, finding some stabilization here. I will mark it. Okay. What we're doing is we're measuring two different slopes. Okay. A lower low really kills any kind of slope, right? So we'll see if we stabilize here off the 60. Obviously, buying at $60 is a psych level, not too complicated of a position. And if you're building a position on increasing global macroeconomics, you definitely buy a dip to a psych level. Okay. So Mohammed says, so if the Fed holds a 2% inflation target, what will change the policy? Well, we already know well beyond that, don't we? So go back to April of 2020. So 1 year ago, I think it was April 19th. In a speech that he gave, he talked about an overshoot. Tells you everything right there. So when he said that, as he said it, within 30 seconds of him saying that, I was teaching everybody here about what an overshoot is, okay, how it's defined, and that's the difference between potential GDP and actual GDP, and then what the overshoot means. So he's already got the change in policy built into the policy, so there won't be a change in policy. So on April 19th, 2020, I said I'd short the US dollar for 5 years. So, like, what will change the policy? Well, let's talk about it, 3.5 years from now. Because it's now been 1 year, and the dollar's generally been weak every single day since he said that. So, yeah. So, I'd go back and watch that one, Mohammed. Right? Yeah, I don't know. You'd have to do the search. YouTube.com/Forex Today. Cool. Hey, this is cool. I'm going to be back there next week, actually. It's funny. I don't see any specific one. Well, Daniel, no. If you buy him a coffee, this is cool. I'll be here in a couple of days. So, anyways, no cam too. Tough day. Everything's so difficult. Yeah, that's my beach house, huh? Anyways. Oh, I only taught it to swing traders. Okay, well, there's the return on your subscription fees. Mohammed, they're stupid. Okay? It's just dumb. The whole premise is dumb, where you want to pretend you're a professional Forex trader and you're like, but this whole other thing out there, monetary policy, macroeconomic conditions, it's all worthless. Everything is in the price. It's absolutely ridiculous and amateurly stupid. It's just stupid. Okay? So, if you're going to be a professional, why would you not want to learn the fundamentals of finance and economics and investing and business? Like, why would you shy away from it? Right? Isn't it funny? Well, actually, so Mohammed, let's address a couple of things here because it's funny. And Mohammed, thanks for bringing it up because I don't get it. I don't go to other people's live streams and webinars and stuff. So I don't know what's pitched out there, but there's always a pitch. So this idea like price action is lagging, indicators are lagging. Price action is not lagging. It's a leading indicator. Okay. So I have two leading indicators. Let's clear this out. Let's just put this, I'll just reset it. Okay. All right. I have two leading indicators. Let's do it daily here. I need more price action here. Okay. All right. I have multiple indicators here. Let's take a look. Okay. I'm not talking about the moving averages. Not okay. Those are lagging because they've measured the previous candles. Okay. This is why I use a zero lag from sometimes because it removes the lag. Come on. Oh, let's do it this way. Okay. So we don't need the moving average. Okay. Great. So I have two leading indicators now. Okay. For example, I'm looking at tomorrow's pivot points, clearly leading. So I can front run tomorrow before it's happened. Okay. Okay. You see that? That's tomorrow. So that's a leading indicator. Based on current market conditions or today's market conditions, tomorrow should be something like that. And as today plays out, it'll adjust based on what happens today, predicting tomorrow. So that is, by definition, a leading indicator. Okay. The second indicator I use which is leading, is on this chart too. But it's not an indicator. It's called price action. So, right, Muhammad said, this other guru said, price action is lagging. It's not true because, right, when you look at things like, okay, we saw this when price was down here. This is price action. And this will tell you that you're at support and there's a high probability of reversal. But you know this not just when you're there, but as it's falling, you can say, well, around here, I should be on red alert for a reversal. And you knew it a day or two before it happened. Same thing, up, 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 down, down. Okay. Up, 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 down, down, up, 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 down, down, up, 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 down, down. Well, price action, okay, is always helping you adjust as you move forward. And you're always looking left and thinking right. Okay? So for example, if let's move in a little bit. Okay, you're a bull. You like the double bottom, and now you're going to fib your way up. Okay? This idea here, for example, and now we're probably in another one like this. These ideas are helping you find support in the future and predict extensions in the future. Okay? Price action is a leading indicator. If you're using it correctly, okay, you do things like say, this was bullish, this has made a higher high, therefore I'm going to buy a higher low. And this higher low will predict a higher high. And then the higher high will also then set up the new higher low. So this price action starting on a double bottom predicts a higher high. The higher high predicts the higher low. The higher low predicts the higher high. The higher high predicts the higher low. The higher low predicts the higher high. The higher high predicts the higher low. And you're always one or two, right? Certainly one, but sometimes two periods ahead of the game always if you're using price action. Can you see that? Pivot points, my pivot points. The standard pivot points don't because they don't think ahead. My pivot points think ahead, so they're a leading indicator. Price action is a leading indicator. But our ability to put plans together is also a leading indicator. So an activity I did with the swing trading group last week is I said, create a trade plan. And so they created a trade plan. And then I said, well, so what do you expect to happen if your trade plan works? What do you expect to happen next month? And they're like, oh, that's easy. And because they got a leading indicator, the pivot points, which indicate next month's pivots. So they're like, okay, so if that works out, here's what will happen in April. And they put that together. And great. So now they finished off March. They've planned out all of April. This is in the middle of March. They finish out the 2 weeks of March, and they've already planned out April, the full month of April. So now there's no more leading pivot point because we haven't done April, so you can't have pivot points for May. Because the leading pivot points that I use are based on the current, are estimates based on the current period, which would be March. So then I had those traders that have planned out March and planned out April. Then I had them plan out May. And most people were just stumped. They're like, how can I do that? I don't have an indicator. And I said, well, let's think about it. Okay? And so they were able, using nothing more than their experience, their mind, their understanding of price action, their conviction to their bias, their level of understanding of the math of the indicators, help them then plan out May. And we did this for the CAD, for the Aussie, for the pound, I guess, and probably euro as well. Isn't that cool? So people in the swing trading group finished all of March, planned out all of April, and have sort of lines in the sand for May. They're thinking in May already. In fact, many of us are thinking June and July. Leading indicators. Okay? Isn't that neat? Isn't that amazing to be working as a collaborative group, a collective of minds like the Borg, using our tools, our knowledge, our research to plan 2 and 3 months in advance? Isn't that cool? Uche says, Wayne, so the main ingredients are the long-term bias, for sure. And then current directions, the current conditions. So the next thing is you use technical analysis to measure, right? Measure current market conditions. So for example, if I'm a bull, I would open a chart, use technical analysis to measure price and time to say, are the market conditions favorable for a bullish mindset? And from the bullish mindset, do we have the right price and time to enter a bullish trade? Think of all that coming together. Your trading will improve versus making new decisions every day. It's much easier to say, I'm a bull. Great. Step 2, open up a chart. Is the market bullish or bearish? Well, it's not very bullish, but it's definitely not bearish either. Okay, great. So what would the right time and price be? Well, on a 4-hour chart, what I know is I don't want to be below here because then it would no longer be slightly bullish. In fact, it would be neutral, maybe bearish. So as long as we're sitting up here, okay, I can be a bull. So what's the right price then? Okay. Something like this would be fine. So right now, you could have bought it at 60, but you didn't. It went basically to 61, and is now at 60 and a half. You have a 50% discount from the current range. You could have bought it at 60, but you didn't. That's fine, though. You might have given up. You might have waited to see if it would hold. Okay? So here's the other interesting thing. This move here is tomorrow's trade plan. Let me say it again. This is tomorrow's trade plan. Okay? This was yesterday's trade plan. The one you missed was yesterday's trade plan. Okay? So now we're interested in tomorrow's trade plan. So if you're already a bull, remember, nothing on this chart should make you a bull. If you're not a bull, if you're a bear, then you're going to have completely different opportunities. So nothing here should make you a bull or a bear. That's irrelevant. All we're looking at now is, are the conditions like this? If so, as a bull, we're not interested. Are the conditions like this? If so, as a bull, we are interested. Great. So we are interested. Great. So we want to buy a dip. And we are looking at the right price and time. So you could, for example, if you were a bull, you can buy now, front running tomorrow's trade. Sorry, by tomorrow, I mean next week. Sorry, that's next week's trade. Sorry, my bad. Okay. And we also know this is nomad's land. I don't really want to be involved in the fight down here. And I'm not, like this is not even, I'm not even there. I'm gone. I'll be long gone by then. Okay. So it has to go up from 60 next week. The target right now is only 61. So we're not expecting much. So it's just a modest buy and hold. You might be careful, though. Holding a WTI position is expensive. The other way you could do it is saying, well, if this then holds, then you can start doing things like day trading as a bull. So now I'd get off the 4 hour, I'd get to the 1 hour. Okay. Or wait, it was daily. No. Hang on. No, it was daily. It was daily. My bad. Sorry. So it was daily. So this is tomorrow's trade. And that's not bad. For a day trade, it's not great, but it's not bad where you buy at 60.50, you're going to 61.50. That's like equivalent to 100 pips. Okay? Hey, $1 on oil ain't bad. Sangam says, how many minutes do I meditate? At least a half an hour. Okay. Yeah, Mohammed, that would also be wrong. Meta is 100% correct. Looking at price and time data does not make you a bull or a bear. Okay. Let me ask you this. Based on what you see on your chart, give me a prediction for July 2021. Or how about this? Give me a prediction for April of 2022. And you're like, well, I can't do that. I don't have any. I don't. And then you might throw out stuff like this. Well, my annual pivot points tell me blah blah blah. I'm like, dude, come on. Okay. At some point, it's just easier to say everything's in the price. I use my tools. I'm like a robot. I don't have emotions. I don't have to plan anything. Everything is data driven. Like, come on. Come on. Okay. Yeah, Mohammed's like hard to guess. Well, let me ask you this, Mohammed. Can you visualize wherever you are in the world? Okay. I don't know where you're from. It doesn't even matter. Can you visualize what the weather will be like in November? Wherever you live, can you think of your backyard, your neighborhood, your country, what farmers will be doing? What, if, right? That kind of stuff. Can you do that, Mohammed? And don't type an essay. It's just yes or no. Do you have a pretty decent idea? Yeah, okay. Do you know day by day what the temperature will be? Can you tell me what the temperature will be November 17th, 2021? Okay. To what accuracy? Do you know for sure? No. But you have a pretty good sense based on not just what's happened in the past, but what is actually normal. There's this other, past performance doesn't predict a future result. But I can tell you where I grew up in Canada, it's not going to be a hot, sunny day in November 17th. I can tell you farmers will have already harvested their crops. Do I know for sure as a fact? Pretty close. Yeah, pretty close. Okay. Uche, I disagree with you. Okay. Anyways, so there's this idea of the future is full of variables. Some are random, but many are not random. Many of them are reasonably predictable. Things like the general weather, maybe not day by day to the, on this day it'll be, 36 degrees Celsius. This other day will be 22, like that kind of stuff. Now, if you live in a part of the world where it never rains, it's pretty easy to say, well, it's not really going to rain any day in November. And 99% of the time, you're probably right. But in other parts of the world, you could say, well, it's going to be cold, but not snowing. It could be sunny, cloudy, or rainy. We don't really know. You can't really predict. The weather is quite unpredictable, but there are still patterns inside that chaos. Okay, it might snow. It usually doesn't, but it could. Okay, but you could also say in Wisconsin, in November, crops will have already been harvested. Okay, that's what I mean by fundamental analysis, right? And from that, you can have a bias. Okay? So instead of talking about weather, we could say when you read the economic reports out of China, economic reports out of Australia, economic reports out of Canada, economic reports out of the United States, economic reports, so on and so forth. Right? We've read economic reports from the central bank from Israel, the central bank from Mexico, the central bank from South Africa, the central bank from Japan, the central bank, I'm missing one, of India. Recently, in the last few months, I've brought up all these websites, we've downloaded reports, and we've actually looked at them, as well as many of the majors. And when you read these reports, they talk about their economic research domestically but internationally. So now you, as a researcher, can take the aggregate of all this information and start compiling your own model, your own view of the world. And you can say, well, based on my research, it seems like this over here is happening, which would impact here. In fact, these guys have confirmed this other thing. Okay. And now from that, I can track the flow of money. Money is likely to go here this year, next year, and the other, right? For all these different reasons. And therefore, now I can make some certain assumptions in my trading. I can create a bias. Will the United States dollar strengthen or weaken? Okay. So then we can ask ourselves things like, interest rates are skyrocketing, not the Fed funds rate, but on bonds. Well, how do you get bonds to skyrocket in the United States? People that own bonds sell the bonds. That means their investors, many of which are foreigners, are exiting their safe positions, locking in money, right, in U.S. treasuries, because they're likely exposed to the reserve currency anyways, so they want to have as much, locked into that. And now that they feel like it's time to reinvest that cash, they've asked for that cash back, they've sold their bonds, interest rates have gone up, they sold the bonds, and then they dumped their dollars. Because remember, they sold the bonds. Now they have $1 billion in U.S. cash, but they don't want $1 billion in U.S. cash. They want to reinvest their money back into Malaysia, where the money originated from. That's what made the dollar strong back during the crisis. So now they're like, the crisis is over, dump the treasuries, interest rates skyrocket. Now they have cash. They don't want the cash, so they dump the U.S. dollar, and they get their local currency again. And then they take the money home and they invest locally, or they just spend it locally. So from all of this, you can say, oh, look at that. I'm a bear on the U.S. dollar. Interest rates, right, on the 10-year T-note are up 350% since I said I'm a bear on the US dollar for the next 5 years. 350% increase of the 10-year T-note yield. Because when I said, that's it, I want to sell the US dollar, right? The overshoot idea comes from the peak in the bond market, the treasury market, the peak. Okay? And now once we start to taper the Fed funds, oy vey, you wait. Interest rates are going to go up and up and up. Not Fed funds rate, but actual interest rates. Things like, right? And then you watch. The stock market will go up. Now, there'll be some volatility because many people are fully loaded the boat on stocks that will do well in the old conditions. And once the Fed tells us, or actually does change their policy and starts tapering out of quantitative easing, then everybody has to dump all of that and get into something new. But we're kind of going through this process. That's why the hedge fund that bet everything late in the game lost all their money, because A, they're stupid, and B, they were late. So people started rotating out of positions, and those guys were so leveraged betting the wrong way that they paid the penalty. Okay? But notice that these crises happen at the end of a quarter. And then the one crisis leads to a new opportunity. Never let a good crisis go to waste. Dumb money is dumb money. They're going to have crises. Hedge funds are going to blow up. Dumb money does dumb things for dumb investors that have dumb money. Okay? It's not a Chinese whale. It's some idiot, right? Some idiot with unbelievable levels of leverage. Okay? Now, if you look at what that hedge fund did, they hid all their positions from their brokers. So they all opened up a whole bunch of brokerage accounts all over the place. It's like your Forex account having 20 different brokers, putting money in, and then asking for 1,000 to 1 leverage, and then throwing down all the same trade across the board. And the trade is counter. Okay? Is a counter trend trade, betting everything with ridiculous levels of leverage. And in a retail account too, your margin call comes when you hit break even, right? But these prime brokers were set up differently and stuff. So they didn't know that the hedge fund was betting everything. So like if you had 10 brokers with 10% of your money in each one of them, and someone's taking crazy risk, and your broker calls you up, right? And like, hey man, you're taking crazy risk. You're leveraged 1,000 to 1 and you're putting literally every penny into this trade. You know, this could be troublesome. And you're like, what? I only have 10% of my account with you. And they're like, oh, I see. So if you blow up this, if there's a margin call, you can come up with the cash. But you repeat that story 10 times and you tell every prime broker, oh yeah, I'm leveraged to the hilt, but this is only 10% of my account. Oh yeah, I'm leveraged to the hilt, but this is only 10% of my account. Yeah, I'm leveraged to the hilt, but I only have 10% of my account. Meanwhile, your whole 100% of your account is leveraged to the hilt. Okay? So this idiot blew up, right? Now, it's not a hedge fund. Correct. Cave is right. It was a family office acting as a hedge fund. I wouldn't be surprised if if Wang owed a whole bunch of money somewhere and he went in and he just bet the whole thing because he was desperate. This is usually what happens. Okay? 10 times 10 times 1,000. Right, Michael? So anyways, yeah. So that kind of stuff should happen. That is dumb. Now, what's even worse is now the government comes in and says, well, what do we need to change so this doesn't happen again? You hang them. You take them out in the middle of Wall Street and you hang them. And no one will do it again. But of course, nothing we'll talk about it. We'll hold hands. What should we do? We should add more regulation, right? This guy was a liar and a scumbag. And now other people have to pay the penalty for working for him. So like Credit Suisse has to come up with $5 billion. Nomura has to come up with that $5 billion. Like, come on. So that's what you should do. And it will never happen again. The problem is I'll probably get in trouble for even saying it, and then yada, yada, yada. But that would put the end of it. Okay? I heard it. No, I don't want to say the old story. Anyways. So, but that's how you do it. That there's a consequence. Like, you cannot bet this big. I mean, think of it. It was designed to be stupid from the beginning. So at the very least, these guys lost money. Okay? And the prime brokers that were stupid enough to do it are paying the penalty. Morgan Stanley didn't lose that much money. I think they had a Deutsche Bank account, which didn't lose that much money. They had a Goldman Sachs account. It didn't lose that much money. So Nomura and Credit Suisse, by the way, the Credit Suisse is the worst trading firm I've ever seen. So they've made some bad decisions. And they gave this idiot that kind of leverage. Okay? Right? It's like a kid came into your gun store, clearly on drugs, obviously got mental and emotional problems, wearing a black trench coat, and says, I'd like to buy a fully automatic rifle with extra large clips that hold at least 100 rounds. And you're like, okay. Okay. Alton, though, says, who's the bigger idiot? The banks who already know him. Alton, he was a liar. So, yes, those banks make mistakes, particularly Nomura and Credit Suisse. And the other brokers did a better job on compliance and risk management. But ultimately, a liar is difficult to catch. Guy comes in and says, I have $50 billion under management, and I'd like to open a small account. Maybe, I don't know, $5 billion. It could be $10 billion. Depends on how the relationship goes. Would you like to do business with me? And they're like, oh, wow, you have such a great reputation. $50 billion under management, huh? Yeah, we'll start small, though. I'll throw $5 billion your way, but what can you do for me? I'd like some leverage. I'd like some complicated derivative strategies. Will you be my counterparty? They're like, well, we don't necessarily do this, but, okay, we can start there. And he's like, good. If it works out good, I'll throw another $5 billion your way. Okay. And of course, the whole thing is, this is why if someone ever wants to invest in your fund and they say, well, we want to invest in you, but, before we give you $5 million, I'll let you play with 100,000, but there's more to come. So if you're good with 100,000, we'll bump it up to 5. And if you're good with 5, we'll bump it up. And you're like, not interested. Thank you, pal. Piss off. They're full of crap. So, right, but they didn't do that. When a guy comes up and says, I'll give you $5 billion and there could be another 5, shoot, I could give you the whole $50 billion, right? So what he did was took advantage of those banks by not fully disclosing, right? There's an asymmetric information challenge here. A guy comes in and he's worth $50 billion and he starts selling you a story. Hey, well, if you tweak the rules for me, I could make you rich. Hey, if you tweak the rules, if you're a little flexible on this stuff here, a little extra leverage, a little more opaqueness, a little more complicated derivatives, just this one time. But if you do it, there's more your way. And what they did is They did the wrong thing. But it's really difficult because they're being lied to and manipulated by design. And so again, let's say 10 brokers leverage 1,000 to 1 on each broker doing really complicated, opaque derivative trades. The sales pitch might be, well, this is a high risk account where it's a small portion of our overall portfolio. We understand the risks if you do. And the bank says, well, we'll do it because you got the liquidity with the other 45 billion. But of course they didn't. They gave the same BS pitch to all the other banks and took advantage of their vulnerabilities. The thing is, a company like Goldman caught it faster. And they're like, oh, we don't like what you're doing. And you might have 50 billion. We're not interested because of what you're doing. And so I think Goldman Sachs didn't even lose any money because they had a better compliance department and a better risk management department. And somebody must have walked in from the risk management department, right? The chief risk officer kicked down the door of the CEO and said, holy crap, you see what this guy's doing over there? Pull the plug. Get our money out of those positions, unwind everything, and get rid of this client. And they had the guts to do it. Oh, but what if he gives us another $5 billion? Dude, so someone did it at that bank, and that bank wasn't hurt. Goldman was a little smarter. So good job, Goldman, right? Credit Suisse, oy vey, got clobbered. But they were drinking the Kool-Aid, right? And it seems like when Goldman pulled their money, the money moved over to Credit Suisse, and then they're like, hey, man, you're doing really good. Let's put in another 5B. Let's put in another 10B. Okay, keep leveraging us up, though. Yeah, Mohammed's right, though, but if it had worked, then he'd be a genius, right? I very much disagree with that, but that, as far as a point of view, but you are right. An idiot like that, if he happened to be right, he'd say, oh, look, he's brilliant. He's a Warren Buffett. He's a Ray Dalio. He's so good, right? Ray Dalio blew up his account. Ray Dalio, who predicted a big crash in 2020, lost money in the big crash. He predicted it, didn't do anything about it. We forget to mention that. You're like, what? Ray, you lost $1 billion during the COVID crisis? But you were calling it. You called it. You said it would crash. And you you didn't even do what you said you would do. But I bought your book, right? So there's a lot of problems. And the guy, what was his name? Paulson, that bet everything on gold back in the day, and he made 2,000% or something on gold, and became an instant billionaire personally overnight. And then what did he do? He took his fame, his wealth, and everybody in the media is like, this guy's a genius. He predicted the real estate crash, and he put it right and made money on gold, and now he's going to start this whole other thing. And he went out and he raised 10 times the amount of money and then lost it all betting it on gold as gold collapsed and fell. So the genius 2 years later was a fool. Then you realize you can gamble and win, but you're still a loser. Yeah, Ray got distracted by telling us how brilliant he is. Let me give you the 27 rules of going to the bathroom correctly. Oh, thank you, Ray. Thank you. Only 27 rules to go into the bathroom correctly, huh? Yeah, okay. 700 pages it takes him to teach you how to use chopsticks. 700 pages in his book. Dude, you can't get around to saying what you need to say in under 300 pages? You need 700 pages to make a statement? Come on, dude, you're not a genius. Okay? Yeah, oh yeah, everyone does, right? Yeah, George Soros is probably the most interesting of them. Like Ray Dalio is right when he talks about macro. He's right. There's nothing crazy about that. We might even read one or two of his books in my book club. Okay? But George Soros, I think, is more of a genius. Now, you might hate his guts, so don't turn off. Don't get angry if you hate his guts, and I'm talking about him in a positive way. Just listen to me for a second, okay? So despite what you think of him, okay, I did work on a board of directors with him. He never called me over to his house for a barbecue, but his friends did. Huh? That's pretty good. I've had a friend of George Soros invite me over to their house in Switzerland or France or on the border of France and Switzerland, whatever. But I got invited to a barbecue and I was fascinated because I was still a young man. And they're drinking champagne, and I'm like, it's not even New Year's Eve, right? I'm a young kid from North America. I'm like, I thought champagne was for New Year's Eve. They're like, no, we drink champagne every day. I'm like, damn it, these guys are awesome. 900 years old is how I remember them too. Anyways, George Soros, he started Quantum Fund and became a billionaire very quickly, very easily. Probably by taking gigantic bets, but back then markets were also very inefficient. So just because he was 5% smarter than everybody else, he made 500% more money. Okay, great. But then he had the money. So what do you do after that? Once you got more money than God, as one book was called. Not one of his books, but someone wrote a book about that. Anyways, he started to see the world as as truly the way it is, that we're moving from socialism to capitalism. And socialism isn't perfect. In fact, it's flawed. It's failed. So socialism has failed, and the whole entire world is moving toward capitalism. But capitalism isn't perfect. In fact, there are some pretty significant flaws. In particular, in certain periods of time, there are flaws, and those participating in the system, because remember, it's just humans interacting. It's how they interact that creates the system. And then there's rules for the system. And very often, they're not making the right decisions, or they're making decisions that emphasize the flaw. No, they don't mean to, but it's there. So the reason he broke the Bank of England was not to make money. He already had all the money in the world. And there's diminishing returns to money, right? For anyone in my macro class, they can think of diminishing returns, and they can show you, right? The difference between having $5 billion and $6 billion is not even noticeable. If last year you had $5 billion and this year you have $6 billion, your life hasn't changed at all. If you went from no money to $1 billion, your life changes a lot. That's called diminishing returns. So George Soros wasn't doing it to make a bunch of money. He already had a bunch of money. The consequence of doing things is you get a bunch of money. So what he was showing was that there was a flaw at that time, as the EU and the UK were moving towards a single currency. Even then, the pound was going to be turned. There would be no pound. It'd all be euro, all this kind of stuff. And they were developing, through the process of many years, a trading zone and eventually a single currency, all that kind of stuff. Okay? And there was precursors to the ECB as Europe prepared. Okay? And so part of this preparation was rules were created for every country. If you're going to be part of the system, you must meet these minimal benchmarks. You must have these rules in place. You must have these finances in order. You must have these things checked off the box. So he looked at the UK and realized, well, the UK is giving up the pound. And for the Bank of England to meet this kind of new ECB mandates, the Bank of England will have to do certain things. Do you understand? He has the same information as everybody else in the world. And he says, well, that's interesting. If the Bank of England will be required to check off these boxes, then the Bank of England will make certain changes. And if those certain changes will impact the value of the pound, and George Soros can take advantage of that because he knows it's going to happen before it's happening. He was smart enough to know that over the course of the 5 years, let's say, that the Bank of England will need to do certain things. And since he knows it's going to happen, he can front run the heck out of it. So he comes in with a huge stack of money, we'll say 50 billion, I don't remember what it was, leverage to the hilt, and he got it right. Wang got it wrong, and, we'll call him a fraudster. George Soros got it right, and he's a genius. The thing about George Soros is he did use logic. He was not betting big. He was betting big. He was betting leveraged, but he was betting with the market per se. He knew the consequence of the actions of the Bank of England, and he knew what the actions were going to be before they even did it. So now you're following logic. He wasn't betting against the market. He was sort of betting on the outcome. And he bet so big that eventually the Bank of England ran out of money. Okay. Yeah, so Sangham, we will also read Jim Rogers' book. I personally want to read Adventure Capitalist. And yes, Jim Rogers worked with George Soros at the Quantum Fund. Okay. So, so George Soros, he's different, but he's doing the things he's doing to make capitalism better. Okay. Right. So, Michael, George Soros would say he didn't break the Bank of England, he saved it. And because their vulnerabilities were exposed, they were forced to then fix those vulnerabilities, one of which was they were not going to enter the EU. They are not giving up the pound, for example. And you can thank George Soros for that. The reason the United Kingdom uses the Great British Pound is because of one man only. The Bank of England and the government of England, or Bank of England and the government of the United Kingdom, were absolutely in the process of getting rid of the pound. They were in the process, and because of George Soros, they stopped and reversed the process, and they kept the Great British Pound. And I think it was ultimately the right decision. I don't know why you'd invest in the euro right now. It's so flawed. I don't know why you'd want to own it. Okay, so thank you, George Soros. There's a movie, Rothschild, 1934. Really? Yeah. So yes, we will be doing a book club. That was delayed. My programmer got COVID, and he might have actually died. I don't know. His account's been shut down. All the money I paid him over the course of 4 or 5 months was returned to me, and he doesn't respond to Skype, doesn't respond to emails, doesn't respond to correspondence over the website. Other projects that he was working at have canceled, and he might have actually died of COVID. He got sick, and I kept him on for a couple of months, like way beyond reasonable. I kept him on, kept him employed, but I think he actually died. Yeah. I think he was Tunisian. So I don't know what the hospitals are like in Tunisia. How to join the book club? I haven't launched it yet, but be part of fxbootcamp.com and be here. Okay. So anyways, I don't know how we got onto history. Did we cover any technical analysis today? Are we still on the first chart? I don't know how you got me going. I promised to do nat gas and Ripple, so let's do that. Okay. So right now, this is a bullish exit and a bearish entry. If you're a bear on nat gas, what this chart tells me is 2.12. If you're a bull on nat gas, this is going to drop to 2.50 and go to 3.0. 2.99990. Yeah. Well, people usually bail on me if I'm actually teaching or we're talking about something interesting like we did. Most people bail and they're like, he's not giving me signals. So I usually get a lot of thumbs down. So if it was all right, click the like button, huh? Let me know. So anyways, there's that on natty gas. Taking a look here, we're stopping at 60, obviously. Okay, not too complicated. So this goes into the idea of now, at the very least, forming a plausible inside range and a full range, but we're using a bias to take us farther north. So if you remember, it was close to a month ago now, maybe the very beginning of March, we said down. I had a 382 plan and a 618. Very quickly, the 382 failed as we made this move here. And so 4 weeks ago, we said if it bounced at 618, which is 50, we would hit $65. And so far, we're up $10,000 in about a week off of our 618, which you had weeks to prepare for. And I left all the analysis here so you could see it. Pretty cool. Thanks, Dean. Thank you, Barry. Yeah, the only problem with that 88 is that you're going to be tested, and I hated professors that would start a lecture and not finish it, or do 1/3 the lecture in 2/3 the lecture time, and then just burn through the material at the end. You can't take notes, and if there's a recording, it's very fluffy, very quickly, very hastily taught information, and you're just like, you're gonna do poorly on the exam, and it screws up your GPA, and your GPA matters big time. At least it did at Harvard, and it was very competitive to do well. So if you had a bad professor, I had one professor that was terrible, that couldn't even get off his first slide, and they were 3-hour classes. And he would just just do Q&A the whole time. And there was always a couple of idiots that would put up their hand. But what if it happened like this? What would you do? And it'd just go on for hours. And I'm not joking. We would stop for a coffee break. Me and my buddies would go across the street, go to the bar, have a couple of shots, and come back to class because we're just so bored, and we're not getting anything out of it. The professor's just wasting time answering questions from people that had stupid questions, and so therefore there was no lecture. So in this case, there isn't a lecture and there's not an exam. So it's a good way to sort of open the floodgates of knowledge. Yeah, 88's like I was lucky to learn on my own. But then I've had to do that too, and I've had to teach myself stuff. Like one of my classes, I had to teach myself calculus. But it's kind of like doing work that you're not going to get paid for. You know, nothing's worse than going to Harvard and not learning anything. But I got an A in the class. What can I tell you? All right. Okay. Gold. Yeah. Okay. Look, my patience and my discipline has saved me from several losses on gold. And you're like, Wayne, why don't you just sell it? Oh, I could. But, it's just not what I don't want to do it right now. Okay. Oh, you want to go back to Biddy and say 54? Well, let's take a look at this. Yeah, pretty reasonable, right? There's two outcomes. Like this is why you use moving averages, right? This is why you use indicators. So on a 4-hour chart, okay, it's saying a couple of things, right? You got this moving average and you got this moving average, which is the same moving average, by the way. Thank you, Barry. I smoked a really wonderful cigar yesterday, sitting in the shade. It was beautiful, warm outside. The grass is green. My azaleas are blooming. If you're familiar with the Masters tournament for golf, that's what my yard looks like. The leaves are coming out. The flowers are blooming. The trees are blooming. And I'm sitting on a chair, looking out at the water, smoking a cigar, and watching CNBC. That's what my club is like. So there's a few indicators here. If you think we're on our way here, you're going to pay attention to something like this. Okay? You have a pivot, but it's not a step up. You have sort of dual moving averages here that are saying, yeah, it needs to giddy up or it will take a break. So it's almost 50-50 here at this point, whether it does this or does this. So that's why I use smaller time frames. What else is going on here? Well, you got you have NFP and the weekend coming up. So, yeah, I mean, I don't know. You have to make a decision. The way I kind of teach, though, is if you believe we're going to get above this, you should be in a lot lower. Okay, so I had this price here 2 or 3 weeks before we got down there. So I'd rather you be buying here or maybe pullbacks here and stay away from the stuff here. Richard, it'd be easier if you emailed me. Oh, you heard the yeah, someone keeps calling my Hong Kong number. I'm not sure why, because Hong Kong it's pretty late. It's 9:30 in Hong Kong, so I'm not sure why someone would be calling at that time. Okay. So Bitcoin and gold. So that's fine. Do some exotics. Here's my trade on Monday. Let me get a marker here. So look, I sold here at the market open. See? And it's going all right. I'm doing all right. It's all right. Not a complicated trade, as you can see. Okay. This is a bullish exit. This is a bullish exit. Okay. Triple top. That's the weekly M3. I sold, however, the monthly central pivot point. So what this suggests is by Friday, we will be down here, and then there'll probably be some up and then down for the rest of the month, targeting a big S2. Oh, sorry, not S2. Hang on. SO. No, S1. Yeah, S2. Very cool. Oh, right on, Michael. Bill, I can't trade it, so I'm not even watching it. Besides, it's so wildly speculative that it's not a logical investment. Typically, I mean, I want to make, you have to, let's back all the way up. I am not a degenerate gambler. I make investment decisions based on global macroeconomics. The stage is set for global macroeconomics based on logical central banking policies. Policies that I understand because of my experience, because of my education, et cetera, et cetera. As an economist, I know how to interpret the economic data like a central banker, and I understand monetary policy so that I know how a central bank would react. And therefore, I can make wise investment decisions. Erdogan is acting like a psychopath. I don't know him. I like Turkey as a country. I like Turkey as a culture. I like Turkish people. Nothing against any of them. But Erdogan seems, from at least the outside, like he's crazy. So I don't know. So you're offended by that or not, I'm not sure. The issue is I have no idea how to conservatively invest and make money in Turkey. You understand that? I like to make logical, intelligent, low-risk trades. I cannot find a position under any circumstances on the Turkish lira, no matter what the price is, no matter what the technicals tell me. It's not there for me. I'm not interested. Okay. Sociopathic political stuff inside. And I see. I don't know anything about Erdogan. I've seen him fire central bankers because they're raising interest rates, but I know raising interest rates is the right thing. I also think Turkey needs to export a lot more because there's a drastic shortage of foreign currency in Turkey. And yet, Turkey is heavily laden and burdened with debt in foreign currency. So it's what would be the right word? It's negligent for the government, for the Turkish government to have no foreign currency reserves and be straddled with devastating amounts of foreign debt. Like, it's horrible. You couldn't create a worse policy. So, I don't know. So, look, you never want tourism to be the key. Tourists would ruin Turkey. Like cruise ships ruin other, other countries, other cultures. Okay? So I would rather have an economy than sell margaritas to tourists. Welcome to Turkey. Would you like a margarita? There's a great taco stand down the way. You're like, dude, I'm in Turkey. Do you want some Turkish coffee? Here you go, tourist, right? You're like, come on, I want the real Turkish coffee. I want the good stuff. Okay? So anyways, never purposely develop a tourist economy. Why don't you just create an economy? Why don't you just create some value for the world? The world will happily pay you for it. Okay? Create some value that the world needs, and the world will happily gleefully pay you for it. Dubai has tourists. It does. Dubai's got a different feeling, though, doesn't it? Dubai does it differently, probably because they have a different attitude. Maybe because some countries create tourist economies because they're desperate. And they'll do whatever it takes. Right? Dubai is interesting because it's a hedge. Okay? And it's probably a great way to great way to launder Iranian and Russian money or something. I don't know. But Dubai it's a great place. And Americans, at least a few I've talked about, some are interested. They're like, really? Yeah, I guess Dubai. And other people are like, Dubai would be the last place to go. I'm like, what are you talking about? Dubai is awesome. I would definitely take my wife and kids to Dubai. Lots to do, lots to see, super fun. Great place to get your first exposure to Muslim culture and food and such, right? You can go to beautiful mosques, right? And then the city is fun. Old Dubai is cool. When you go shopping in the souks. New Dubai is great. The Mall of Dubai. I've never been to the Burj Khalifa. I've always been doing business. Right? Been all over. I didn't go skiing. Ferrari World is cool on your way to Abu Dhabi, going out to the desert, right? There's so much, right? Many great restaurants, fabulous hotels. Everything is clean. Everything is organized. Most places aren't like that. And it's, I think, because Dubai already had so much money that they could build it from day one, where I think many economies, they say, hey, we're desperately poor. We have nothing going on here. we can't even we can't even have electricity, yet alone a booming economy with full employment. Like, nobody here has any real skills. We don't have any real factories. We have horrible communications. We can't even manage garbage dumps. Clean water would be nice. So what are we going to do to get money? Tourists, drugs, prostitution. Okay? Oh, you want to come in and pet our dolphins? That's $100. By the way, you're killing our reef, and in 20 years there's going to be no reef and all the dolphins are going to be dead. But you can pet my dolphin for $100. Because $100 in my hand today feeds my kids. But the reef is going to be gone. The fish are going to be gone. The dolphin's going to be gone. The water's going to be nasty. And we won't have tourists because there will be no dolphins to pet. Well, stop renting your dolphins. Start protecting your dolphins, right? So anyways, I get very fired up about these things. Right? And my favorite example is people going to Honduras, getting off the boat, eating tacos and drinking margaritas. I'm like, you know what? That's not Honduran culture. That's Mexican culture. You should go to Mexico for that. If you're getting off the boat in Honduras, you should get some Honduran culture. And you should pay money to get off the boat. Not $2 a head, $50 a head to get off the boat. Why? Because someone needs to pay for the water, the electricity, and the garbage dump that you don't see. It's 1 mile out of town, and it's mismanaged. It's just a big pile of garbage blowing in the wind with children picking through it, trying to find food. I mean, dude, pay the $50 when you get off the boat. Take care of the locals. Right? And you can't pet the dolphins. Cool. I'm off my soapbox. Let's go. So there's two trades, right? There's the two trades building up. There's that trade, and then there's this trade. So it's working out all right. Okay, about 1% return. Cool. Peso's doing its thing too. Okay, so I'm trying to build foundations here. It's a little too low for me to get involved. Okay, but it's trying, but it's not the right time because it's not the right price. So maybe next week I'll be a buyer. I would not be shocked, in fact. Okay, and once again, this is clearly the exit. Okay. This is our projected exit. See, right? On March 1st, we said the projected low for Kiwi dollar will be 69.44. And on the second last day of the month, we hit 69.44 and stopped. Leading indicator, yo. On the first of the month, projected low, and it happened at the end of the month. Very nice. And look, not just like close. Leading indicator. Okay. USD Kitty Cad, you know what? I had that trade. I got knocked out, and now it's game on again. Yeah. Written on these walls are the stories that I can't explain. I leave my heart open, remains here empty in its cage. She told me in the morning she don't feel the same about us in her clothes. Seems to me that when I die, these words will be written on my stone. By the way, that's the story of my life. So this is the story of my life. Half decent trade, knocked out. If you remember the big point, when we hit this was our target on March 1st. And I said, you need to make a decision. You need to make a decision. What should you do? You got to exit. Should you exit? Should you not exit? Okay, do you remember? We circled it. We talked about it. What should you do? And if you don't do anything, pay attention so that you learn and maybe you do something again. And I also remember saying, don't make it like an always learning experience. Like, I will always do this, because it won't always work. I said, put it in the context too. Put it in the context of, what do you do in March? And if you recall, I had explained that because we're approaching the end of the quarter, that maybe, depending on your own observations, maybe this is a time when people will take profit. And maybe the same decision in April. Okay, so let's say in April we're down here. And you'll say, well, I had this learning experience in March to always exit here. So maybe in April you hit this and you exit because you said, well, I learned. But you may have learned more of March. April might look more like this. And you're like, but that would be an overshoot. I'm like, I know. It'd be an overshoot. It would be bigger than Feb. That's February. Feb. It'd be bigger than March. April would be unusually large. Why? Well, if you're in my swing trading group, we've talked about this a million times. Why? Cool. Right on. So anyways, happy Wednesday. Remember, we have news at 10. And I think there's news this afternoon. I can't remember. So yeah, have you liked the video yet? Would you please click the video? Thank you to Barry for his contribution to the Cigar and Whiskey Fund. I bought a whiskey the other day, and it wasn't an old whiskey. And my friend brought me a bottle as a gift because I hosted the family for dinner, made Chateaubriand, and it was great. And he brought a nice, and his was aged like 15 years or something, and mine is young, like 5. And my wife's like, why did you buy that? It's all nasty. And I'm like, it's not nasty. It's only got a 5. By the way, my wife doesn't talk that way. But she's like, very rightly so. She's like, why'd you buy it? It's only aged 5 years. Like, for a whiskey, that's pathetic, right? And I'm like, well, I like it. So yesterday, I got my Whiskey Advocate magazine, and that bottle won number 6, best whiskey of the year out of thousands. Yay! So I showed it to her. I'm like, it's not nasty, right? I like it, right? Or as Michael Jackson would just say, you're just ignorant. Cool. So anyways, thank you for being on my team. Thank you for being a member of the Forex.Today YouTube community. Thank you for being a member of FX Bootcamp. Thank you for being a client of Trader's Way. Thank you for all you do. Thank you for your positive energy. Thank you for your professionalism and enthusiasm. Peace on earth. May the pips be with you. May your profits be above average. I'll see you tomorrow. Cheers.